This video is brought to you by Meeting.ai, a powerful AI transcription tool which was instrumental in my research for this video, but more on them later. Robinhood was founded in 2013 as an online stock brokerage offering zero commission fees. This was a revolutionary concept at the time, as the legacy brokerages charged as much as $10 per trade. Robinhood became a huge success, as young investors with only small amounts of money could finally afford to participate in the stock market. The old-school brokerages started losing market share to Robinhood. In 2019, they too were obliged to remove commission fees, and zero-commission trading became industry standard in the US. Robinhood went public in 2021. The company's revenue, profits, and stock price have skyrocketed over the past 2 years, and its market capitalization has surpassed $80 billion. Robinhood's success can largely be attributed to the many new product offerings they've rolled out over the years. On June 30th, 2025, they announced what was perhaps their most interesting innovation to date. Using blockchain tokenization, Robinhood now allows retail investors to buy fractional shares of private companies, including big names like OpenAI and SpaceX. This move was quickly condemned by OpenAI itself. They said Robinhood's OpenAI tokens are not OpenAI equity. They did not partner with Robinhood. So if these OpenAI tokens are not equity, what are they? In this video, we'll look at the meteoric rise of Robinhood over the past few years. Then we'll analyze the details of the blockchain tokenization product they recently announced. Online stock brokerages including Robinhood experienced explosive growth during the pandemic. With people stuck at home and flush with cash from government stimulus, it was a perfect time for novice investors to enter the stock market. In the second quarter of 2020, Robinhood had 9.8 million funded accounts. By the middle of 2021, this had more than doubled to more than 22 million. Since then, their number of users has stagnated, only increasing to 25.8 million by the first quarter of 2025. Despite user growth stagnating, the value of customer assets has surged over the past 2 years. At the end of 2022, total customer assets were worth $62 billion. By the first quarter of 2025, this had more than tripled to $221 billion. There are a couple of reasons for the large increase in customer assets. Firstly, US stocks experienced a strong bull market, so stocks held by Robinhood customers have increased in value. Secondly, Robinhood has experienced strong net inflows of new deposits from existing customers. With its sleek user interface, the Robinhood app is attractive to the tech-savvy younger generations. Young investors may start off depositing a very small amount of money into their Robinhood accounts. As they advance in their careers and see their incomes rise, they'll deposit larger sums over time. Over the years, Robinhood has also increased the product offerings on its app, aiming to cover all the needs and desires of the average retail investor. In the beginning, Robinhood only supported trading of stocks and ETFs listed on major US exchanges. They have since expanded into options, crypto, and even real-world betting markets. This feature was added shortly prior to the 2024 US presidential election. Robinhood users can buy futures contracts that pay out if a certain event occurs, such as if Donald Trump or Kamala Harris wins the election. Robinhood makes its money through payment for order flow. Instead of directly executing customer orders on the stock exchange, the orders are routed to market-making firms. There are many firms that specialize in profiting off the order flow from retail investors, the most famous being Citadel Securities. For any given stock listed on the exchange, there is an order book. This shows at which prices market participants are willing to buy or sell the stock. Let's look at the example of Apple's stock. The highest bid is $208.79. This means if you want to sell a share of Apple stock, someone is willing to buy it from you for this price. The lowest ask is $208.83. If you want to buy a share of Apple, this is the lowest price at which someone is willing to sell it to you. Apple is a very liquid stock, with a lot of people actively trading it at any given time. So the spread between the highest bid and the lowest ask is very small. In this case, it's 4 cents or about 0.02%. When a Robinhood user wants to sell a share of Apple stock, Citadel will buy it from them for $208.79. Then, when another Robinhood user wants to buy Apple stock, Citadel will sell it to them for 4 cents higher, so they make a tiny profit on each trade. This is a very profitable activity for Citadel, so they're willing to pay Robinhood for the order flow. Stock options have significantly less trading volume than stocks. This typically results in a much larger bid-ask spread. For example, the highest bid on this Apple call option is $3.35, and the lowest ask is $3.40. That's a spread of 5 cents, or 1.5%. Remember that the bid-ask spread on Apple stock itself was only 0.02%. Thus, market makers like Citadel can make a much greater profit per trade on options compared to stocks. In the stock market, the SEC enforces something called the Order Protection Rule. This requires brokers to route customer orders to a trading venue displaying the best available price. If you put in a buy order for a given stock, Citadel is not allowed to sell that stock to you for a price higher than the lowest asking price across the entire market. Thus, Citadel's margin for profit is constrained. The order protection rule does not apply to cryptocurrency transactions. Crypto brokerages like Robinhood are allowed to route your crypto orders to market makers, even if they offer a worse execution price compared to other market makers. Unconstrained by regulations, crypto market makers can make far more profit per trade. They are thus willing to pay Robinhood far more for the order flow. In the first quarter of 2025, Robinhood processed $413 billion worth of stock trades and $46 billion worth of crypto trades. So the crypto volume is only about 11% of stock volume. Yet in that same quarter, Robinhood generated $252 million of crypto transaction revenue and only $56 million of stock transaction revenue. So crypto, while representing 11% of the volume of stocks, generates more than 4 times as much revenue. Robinhood also generated $240 million of revenue from options trading. Robinhood does not disclose the dollar value of its options volume, but it's safe to assume that it's a tiny fraction of the stock trading volume, as only a small minority of investors trade options. While Robinhood is technically commission-free, the profits generated by the market makers ultimately comes from retail investors. This is manifested in the form of slightly worse prices every time you make a trade. If you trade stocks, especially if you only trade shares in large liquid companies, the cost is so small as to almost be immaterial. The small percentage of Robinhood users who actively trade options in crypto are responsible for the vast majority of the company's revenue. Transaction revenue is only one part of Robinhood's total revenue. They also make significant amounts of net interest revenue and other revenue. In the most recent quarter, Robinhood generated $927 million of total revenue, of which 63% was transaction-based, 31% was net interest revenue, and 6% was other revenue. The other revenue segment mostly consists of the Robinhood Gold subscription service. Being a Gold member costs $5 per month. You receive a number of benefits, including interest paid on your idle cash through their so-called cash sweep program. In the cash sweep program, the idle cash in your brokerage account is deposited into a high-yield savings account at one of Robinhood's partner banks. Currently, Robinhood makes approximately 5% from their partner banks. They keep about 1% for themselves and pay 4% to Robinhood Gold members. If you are not a Gold member, your idle cash will be invested into short-term treasury bills, and Robinhood does not give you any of the interest. Gold members also receive other benefits, including larger instant deposits and access to the Robinhood Gold credit card. In early 2024, Robinhood launched its own credit card called the Gold Card. To get this credit card, you need to be subscribed to Robinhood Gold. The Robinhood Gold Card has a number of benefits, including 3% cash back paid on all purchases. This is a very high rate of cash back. The generous cash back rate is a loss leader to convince people to order the card. People who carry a balance on their credit card from month to month pay an interest rate of 22 to 30% based on their credit score. If you always pay your credit card bill in full at the end of each month, you of course don't pay any interest. The 3% cash back you receive is subsidized by the people who fail to pay off their balance and accrue massive interest expense. Robinhood's balance of interest-bearing assets has increased substantially over the past couple years, rising from about $15 billion in 2022 to more than $45 billion today. The majority of this increase comes from the cash sweep program for Robinhood Gold users. As interest rates have risen, many Robinhood users are opting to hold more idle cash in their accounts to take advantage of the cash sweep offering. Despite the generous 3% cash back, the Robinhood Gold Card has failed to see much traction. As of the end of the first quarter of 2025, they only have $429 million of credit card loans outstanding, representing less than 1% of their interest-earning assets. Robinhood has benefited tremendously from the Federal Reserve's interest rate hikes over the past 3 years. In the first quarter of 2022, they generated $55 million of net interest income. In the first quarter of 2025, they generated $290 million. They have more interest-bearing assets, and they make a higher yield on those assets. Thanks to strong growth in trading volume and net interest income, Robinhood's revenue has more than tripled over the past 3 years. While they used to incur operating losses, they are now massively profitable. In the first quarter of 2025, they generated an operating profit of $370 million, representing an operating margin of 40%. Recently, Robinhood announced what was perhaps its most ambitious product launch to date. On June 30th, 2025, they hosted an event called To Catch a Token. The company did everything possible to hype up the event, with CEO Vlad Tenev even filming a cinematic trailer for it. They rented a super luxury villa in the south of France to host the event, with a large Robinhood logo placed in the middle of the pool. The event was published on Robinhood's YouTube channel. The video is 44 minutes long, and most of it is frankly really boring. When doing research for videos like this one, I frequently have to watch through long videos or transcripts, just to get a few important pieces of information. I recently started using a tool called Meeting.ai, which is also the sponsor of today's video. I just put the URL of the Robinhood video into Meeting.ai. It quickly transcribes the entire presentation and creates a summary going over the key points, which you can read in a few minutes. In the summary, we can see the main points of the presentation. In the EU, Robinhood is launching blockchain-based stock tokens, which allow European customers to gain exposure to hundreds of US stocks and ETFs, on-chain with zero commission. They are also developing their own proprietary blockchain called the Robinhood chain, which will eventually support the self-custody of stock tokens and facilitate the tokenization of assets like private company stock. To demonstrate this capability, Robinhood airdropped the first ever stock tokens of the private companies OpenAI and SpaceX to all eligible EU customers who signed up for the app during the event. On the left here, we can see the various topics of the presentation separated out. Let's skip down to the tokenization piece, which is the most interesting. Specifically, Robinhood is using tokenization to allow retail investors to buy fractional shares of SpaceX and OpenAI. Meeting.ai also provides timestamps so you can skip to the part of the presentation that you care about. Meeting.ai is extremely useful for things like company presentations and earnings calls. If you want to try it out, just click on the link in the description below, where viewers of this channel can receive a special discount. Now let's have a listen to what Robinhood CEO Vlad Tenev has to say.
I'm holding in my hands right now the keys to the first ever stock tokens for OpenAI. And not just OpenAI, but also SpaceX. SpaceX is in here too. If you download the Robinhood EU app, which we gave you ample warning to do, you're about to figure out why we gave you that warning. I'd like to transfer these tokens to you and give you exposure to two of the most valuable private companies in the world right now.
Currently, Robinhood's tokenization offering is only available in the EU due to the bloc's relatively lenient financial regulations. Robinhood launched in the European Union in December of 2023, but at first their EU app only supported crypto trading. Now it supports stock tokens, a blockchain-based system to indirectly invest in US-listed stocks. So how does this work? Say you want to buy an Apple stock token. You pay money to Robinhood. Robinhood will go to the Nasdaq and purchase one share of Apple. Robinhood retains ownership of this Apple share. Robinhood gives you an Apple token, which is essentially a futures contract designed to track the price of Apple's stock. The token is created on the Arbitrum blockchain. This is effectively a decentralized database to keep track of who owns the token. If you want to exit your Apple position, you sell your token back to Robinhood. Robinhood will sell the Apple stock on the Nasdaq and send the proceeds of the sale to you. So what's the point of the stock token? Why not just transfer ownership of the stock to the investor in the traditional manner? Robinhood advertises a number of benefits of stock tokens. There are no commission fees, and you can buy fractional shares with just €1. Fractional shares and commission-free trading already exist without blockchain tokens. The only real benefit is 24-hour market access. You can trade your stock tokens outside of regular trading hours. Robinhood maintains proprietary pricing algorithms which they use to quote you a price even when the stock exchanges are closed. While this is certainly a benefit, the use of blockchain tokens hardly seems necessary. Instead of using the Arbitrum blockchain, Robinhood could just as easily maintain its own internal database to keep track of who owns the tokens. The original selling point of cryptocurrencies is that they are decentralized and therefore not controlled by any corruptible institution. But even though the tokens are recorded on the decentralized Arbitrum blockchain, the underlying stocks are still owned by Robinhood, which is a centralized institution. So there's really nothing decentralized about the process. The crypto community has long struggled to find real-world use cases for blockchain technology. Robinhood certainly tried to play into this as well. They even invited Ethereum co-founder Vitalik Buterin to speak at their To Catch a Token event. Robinhood CEO Vlad Tenev hyped up the stock tokens as the first real use case for crypto, but they have yet to create any capability that did not already exist. Now let's talk about the stock tokens for private companies, specifically OpenAI and SpaceX. OpenAI and SpaceX have conducted numerous private funding rounds. Many venture capital firms and other private investors own shares in these companies, even though these shares are not traded on stock exchanges. Robinhood purchased a few $1 million worth of OpenAI and SpaceX stock. It's unclear if they participated in a funding round or purchased a stock from another investor in a private transaction. Robinhood ran a limited time promotion whereby EU customers received €5 worth of these tokens for free. The valuation is presumably based on whatever price Robinhood acquired the shares for. So a bunch of Robinhood's European customers have these tokens in their accounts, which are supposedly worth 5 euros, but for the time being they can't really do anything with them. You will only be able to sell your token if Robinhood makes this functionality available at some point in the future, which may or may not ever happen. If Robinhood ever sells its OpenAI or SpaceX stock, they'll distribute the proceeds to the token holders. OpenAI was quick to condemn these stock tokens, saying they do not represent real equity. If you own one of these tokens, you don't actually own any stock. The stock is legally owned by Robinhood, not you. Vlad would probably argue that the tokenization program is still in its infancy. Eventually, it'll become more sophisticated, and there will be a liquid secondary market. This will democratize access to private market investments. But this is a horrible idea. When a venture capitalist invests in a private company, they conduct due diligence. They might meet with the founders and request the company's internal financial documents, which they must review to make an informed investment decision. A retail investor does not have these advantages. If you're given the opportunity to invest in SpaceX, for example, how are you supposed to know if it's a good investment? Private companies do not publish audited financial statements or give disclosures of any kind to the general public. We don't even know how much revenue SpaceX generates. There are sporadic media reports, but these are of questionable reliability. How can you be expected to make an intelligent investing decision when you have almost zero information? While giving away a few OpenAI and SpaceX tokens might make for a good publicity stunt, it makes absolutely no sense as an actual investment product. Alright guys, that wraps it up for this video. What do you think about Robinhood stock tokens? Let us know in the comments section below. As always, thank you so much for watching and we'll see you in the next one. Wall Street Millennial, signing out.